Australian property prices. Are we going through a bust phase in the next 6 to 12 months? Well, Nevada and I are going to be talking about it today. Nevada is my mortgage broker. You guys have probably seen him on the channel before. If you do want help, head over to
cubeloans.com.au.
There's a link in the description as well. And if you want help buying a property in Queensland or Victoria, head over to purposeproperty.com.au. Now, we've had federal budget, end of financial year, doomsday predictions from Channel 9, Channel 7, Channel 10, every property commentator out there. So let's start with Australian property prices. So I'll give you my point of view and Nevada can chime in as well. First of all, let's go the major cities. So Sydney and Melbourne pulling back at the moment at least 1% a month. Some suburbs, I've heard of one suburb recently in Sydney pulling back 9.6%, which is crazy, but that's what happens. You've got outliers in a decline, you've got outliers in a boom. Some suburbs boom 25%, while others do 5% growth, and then same in the pullback. So what we're seeing in the next 6 to 12 months is that 8% pullback expected between now and this time next year in Sydney and Melbourne, particularly in my opinion, over the $1 million price point. I don't know what you're seeing in Nevada in the lending front, but maybe talk through what you're seeing with people's strategy now, given that Sydney and Melbourne are pulling back and investments, maybe those tax changes are happening as well with depreciation, negative gearing and CGT. So what are you seeing on the lending front now? People are expecting pullbacks in those two major cities.
Yeah, well, the lending side definitely impacts what people are able to buy, even if they're willing to go up to a certain price. With those changes, a lot of people's servicing and capacity has reduced significantly. So
do you have a ballpark? So like I know that I've lost servicing from basically, what was it, like 1st of May was a certain figure, and then it probably dropped by a percentage. Do you know roughly what you would think the gut feel percentage is?
Thinking of scenarios that we've looked at this week, a couple of examples where people were sitting around for an investment property purchase, that is maybe around the $950 million purchase price, now sitting at a sort of 700, 650.
Yeah, so it feels like 20% potentially
range, yeah,
give or take.
And it's worse in certain circumstances because it's a tax. Depends on their income and there's a lot of variables in there, but it's a significant reduction.
Yeah.
Overall.
So if you're a lawyer earning 300 grand and you were a 47% tax bracket and you've gone to your mortgage broker and said, hey, I want to buy $1 million investment after the budget because you lose all that 40, that's half your income, then you're not getting negative gearing on moving forward, you might get a bigger drop.
Exactly. And the real unfortunate one we've seen a bit of is first home buyers who couldn't afford to buy owner-occupied property to get in the market that were looking at the rent vesting strategy to enter the market. Like they've done the right thing, saved the deposit, all this sort of stuff, had serviceability at 700,000, 800,000 for rent vesting, and then now sitting at 450, 500,000.
Yeah.
And there's not really options.
They get caned on the borrowing capacity because they were going to go down the rent vesting strategy.
Yeah.
And now they've got an issue.
Yeah. And these are first home buyers trying to enter the market. So
yeah. Well, I also think about the first home buyers from October 2025. I think Albo and the Labor government's probably going, oh, well, I don't know if we've done the right thing here, because those guys went out, gave that 5% deposit scheme, increased the caps to $1 million in Brizzy. I think it was 1.5, 1.6 in Sydney from memory, 950 in Melbourne, I know for sure. And so if you look at Brisbane, Melbourne, Sydney, those caps went up about 300 grand, or Sydney even further, 500,000 increase. And so those first home buyers have bought for 1.4 million in Sydney. Now they've got in with a 5% deposit. So what's that, 70K? And they that 1.4 might drop to 1.3. Say they get that pullback. That's probably about 8%. They're just now lost that 70 grand and some.
Yeah, that's a definition of a rug pull.
It feels like a government rug pull, right? Like this is probably the title of the video, government rug pull, like government rug pull on first home buyers and property prices. There's also, it's really interesting seeing YouTube comment sections about investors are evil, property investors are doing the wrong thing, they're buying too many houses. And then on the flip side, we don't have enough stock, rental prices are going through the roof. What are you seeing on the numbers in the rental appraisals? Have you seen any shift in the mortgage broking space as far as what people are achieving in rents, or does it take a bit more time for that to come through?
Probably takes a bit more time. We haven't seen the valuations drop actually in the bank valuations much yet in most of the ones we've seen recently. If anything, rents still seem to be increasing. There doesn't seem to be a reduction.
Yeah, it's just that time to take it for it to flow through the market.
Yeah, and people seem to be on the property investors we work with seem to be in the mindset of maximizing what they currently have rather than there's some seasoned investors who are looking to still accumulate more and take advantage of the current market. So they see it as an opportunity rather than a bad thing long term. So, but yeah, definitely people looking to sort of increase yields, get better rates, optimize things, build granny flats. A lot of granny flat inquiry at the moment.
Yep, construction lending is definitely going up.
Yeah, looking to optimize what they have. And the other big trend we're seeing is people who have been property investors, over a long period of time. With the current change, they're looking at, what, we're getting close to retirement now, so they might have 5 properties in total, and they might sell down 2 investment properties and the own occupied property, keep 2 investments, and then put all that cash towards a bigger and sort of the dream owner occupied property.
Yeah, so we're getting a lot more investment into that heavy owner occupied space. So that probably 1.5 mil plus. I know a lot of buyers in our buyers agency, if they've got 1.5 to 2.5 mil, or they want to buy that 2.5 mil home, let's sell down house 1, house 2, house 3. So let's sell a couple of investment properties, go and buy that $2 million PPOR with, like you said, maybe a lot less debt on it.
Yeah.
And that's going to be tax effective, completely tax free at the moment. And everyone's speculating whether that'll stay the case in the next 5 to 10 years in Australia. But a shift away from the investments into that owner occupied space.
Yeah, and it's partly sort of the simplifying life thinking and the dream home. But it's also partly...
less tenants, mate. I don't want to sell off a few and have a few less headaches as well.
Yeah, so it's around that thinking, but also some of it's led around they're wanting space to build potentially dwellings for kids that are getting a bit older, potentially like aging parents they want to sort of have the granny flat option for a bigger property. So it's also, as funny as it sounds, a lot of the conversations we're having, they're wanting to get more space to have family potentially live with them for that cost of living.
And create value and create income for some people. Or, as you said, extended families for the younger couples or the younger generation who can't break in. Great. Yeah. Let's build a dwelling at the back, whether it's a granny flat or a strata. We've noticed in the buyers agency a huge uptick since the May budget in the development space. So granny flats, strata or subdivisions, massive pull up. We're actually offering publicly a service around that consulting. So if you want help project consulting in Queensland or Victoria, we're doing that in the buyers agency now, where we can get multiple quotes from builders. We can then go to Nevada and the guys at Cube Home Loans to organise equity redraws or refinancing and construction loans to actually fund these projects. And that's where I see a big push moving forward, is that people have gone, okay, Sydney and Melbourne are dying in prices in the next 18 months. Even at the sub 1 mil range, there's going to be more demand and prices will probably hold a lot better. In other cities like Perth, Adelaide, Brisbane, there's less price growth expected. Obviously, off the back of 15, 20% years, you can't have 20% year on year for 5 years. Like, it just, at some point, the growth has to slow, or you do have to have a natural decline. And so that's where, as you said, extended families, granny flat to rent out for further income, or like we're doing a lot of the strata subdivision or developments. That's where I think the next 6 to 12 months is going to heavily be in the market.
Yeah, definitely optimizing, getting better rates, the granny flats. Like, we've had conversations with people who are originally interested in buying an investment property and it was their first investment property, and instead they've opted towards building a granny flat on their current property.
Yeah, get cash flow neutral.
Yeah, because the cash flow, it's a lot more of a defensible position, right? And
the lending would probably like it a lot further as well now, right? Because even though grandfathering's in for negative gearing, the fact that you can go back to the bank after you build that first granny flat rather than going to property 2, you can say this washes its face. It covers its expenses. That would help you guys on the lending as well.
Yeah, exactly. The incomes we're generally seeing, or the rental income versus the level of debt, it stacks up really nicely on those granny flat builds for the ones we're seeing anyway.
Super interesting. We're moving from the last 5 years being growth focused into that cash flow focus.
Yeah.
And like, I've even seen an uptick in units, townhouses. But I think for me, as a long-term, like, I've been doing the buyers agency 5.5 years now, and where I see things heading across Queensland and Victoria, and we're opening up in New South Wales in 6 months, which is exciting. I think the big play is those blocks that have the potential. And then, as you said, you go to you guys to fund it at the right time. Now, that for some people, if you've got, you're a lawyer, you're a doctor, or you're a tradie earning a 300 grand a year and you run your own business, maybe it is acquire house 1, 2, 3, and then go back and do the granny flat and the strata and the granny flat. Or, as you said, if you're a younger couple and you just, I earned 45K in my first year of work. Nice. I think it was by year 3, only 60 grand. So that was me as a chartered accountant getting my start. So if you're in that position, you're a teacher, you're an accountant starting out, you're on that sub 75K salary, then adding that dwelling can definitely boost you and give you that peace of mind.
Yeah.
Yeah.
Yeah. If it's a good option for people that are wanting to do something, but still wanting to sort of take a slightly more potentially conservative path.
Do you have any guide? Like I know from our side what we're doing with the project consulting on prices for granny flats and developments or building 4-bed, 2-bath homes. Do you have any guides on the interest rates if you took on construction lending and what roughly people would be doing for a granny flat and what roughly people would be doing for a strata or a subdivision for 1 into 2 dwellings?
There's plenty of lenders in the tier 1 space that offer construction at pretty competitive
as long as you've got a
prices.
signed build contract.
Yeah,
right?
you need a signed build contract. In a lot of cases, they'll control the payments to the builder.
Yeah, progress payments.
And not all lenders will actually require that, funny enough. Some lenders will just give you the cash and let you do that because they don't.
Okay.
With granny flats, it's a bit of a unique
Is that because it's considered lower risk because it's a building
because
approval?
the actual main dwelling they're securing against isn't being sort of taken apart. They're sort of comfortable with.
Right.
Because it's something
a
additional.
cleaner, smaller contract.
Yeah.
Straightforward.
Yeah. So for the tier 1 space, it's relatively sort of standard rates. There might be some slightly additional fees. It's generally interest only during the construction period for that amount. So it's pretty straightforward in that space. When you get into like, if you're a business owner, you need to do an alt doc loan and do construction. That's where the lenders that offer lending in that space know there's not many options. So they price accordingly.
Of course.
So it can be a little bit more pricey, but really only during that construction period. So you need to do your maths around, like we're working with a client at the moment, business owner needed to be an alt doc loan because the financials weren't ready. They wanted to proceed. So in that instance, I think the rate is in the 8. So it's quite
Okay.
quite
That's not
high.
too bad for building. But if you're building an asset and it's 200,000 to 400,000,
Yeah.
that's really not too bad in the scheme of things.
And then when that construction's completed, it'll probably go back to, that particular product will go to sort of the high 6s, low 7s.
Even
And
the
then
7s, yeah.
when the financials are available, we're talking, low 6s, high 5s. So
And I think that's the important thing when you're chatting with Nevada or the guys at Cube, that you understand the seasons of the interest rates and the capital. Because Nevada might say to you, it's 8.5 for a low doc business owner, or it's 7.5 if you're a mum and dad investor and you've got good incomes and PAYG. But then once you finish your granny flat, once you finish your strata subdivision, then you can get your valuations. Then you can go back to different banks and reassess. And you might think, making my broker do more work. Are they not going to do that for me? Is that part of the service you guys offer?
it's definitely part of the service. Like you don't want to stay in a more expensive product longer than you need to. And you want to, there's sometimes stages required to acquire an asset and then build on that asset. And then the final part of that is get it to the best possible rate you can to make holding that asset for a longer period of time easier. As a general rule of thumb, even if your circumstances haven't really changed, after 12 months of having a loan in place, it's easier to refinance that loan to a cheaper product.
As long as you make all your repayments.
Yeah, as long as you're making your because you have that history and that lenders reduce the servicing buffer after that 12-month period. So it makes it easier to move to a cheaper product. So we actively put that in as part of our strategy if we're having to use slightly higher rate product to get it back to a cheap product as soon as possible.
Yeah.
And we're doing the work twice, but the reality is there's significant savings for our clients, so it's worth it.
Yeah. So in this changing environment where we've had the Labor government shift the goalposts, change a bunch of rules a lot in succession, the strategy's now changed. We're expecting price pullbacks in the major cities like Sydney and Melbourne. We're expecting flatline in the other minor cities and even the regionals. Again, you're not expecting big price growth in the next 12 months. So I think that focus of getting the team behind you, maybe selling down if you're upgrading your PPOR, or buying sites with the upside potential is the way to go moving forward.
Yeah, and it's a different conversation on the, as you would know, on the buyer's side, like you can, subject to sale doesn't get instantly thrown out the door. You can have your terms be more suitable.
Everything's negotiable at the moment.
Yeah, pricing's a bit more. So it's, as much as it is a period of, changing market and
Lower
uncertainty,
sentiment,
it's also potentially a period of opportunity as well in certain markets and certain price points. And that's what we are. It's interesting seeing the shift, like the people who are looking to buy their first investment property are a lot more concerned. The people that are a lot more experienced and sort of seen the historical, have seen this before in the market and seen it happen, are kind of feels like a bit of gearing up, getting ready to take advantage of the situation.
Well, there's only a window. I remember buying my first property in 2018 with my beautiful late wife, Emily. And I remember at the time we had the APRA crackdown. We had Brisbane not doing anything in terms of property prices, even a pullback between 2017 to 2019. There was that lull, and prices were even like somewhat falling or stagnant. And I remember 2018, I bought my first property, and everyone was like, why would you buy now? APRA lending, the market sentiment was super low, and that was right before a COVID boom. It's like, we're not expecting another COVID boom, but if you're making an investment property decision now, do it while there's a lull. Do it in the next 6-12 months, because when we come into the next growth cycle, that could be 24 months away, it could be 18 months away, it could be 12 months away or longer, but you want to be in it with the right opportunities before, because otherwise you're trying to fight when the competition's growing. Yeah.
And this is what I always reiterate to clients too, even when we were having these crazy year-on-year growth years, is don't just expect it to continue to happen every year. Like, it's going to change at one point. It seems like now's the time where we're having that shift, but you have to look at it as a longer term investment. Like, you can't, property isn't sort of a in 1 year out the next year type of asset class, because that really does increase.
Oh, your risk profile goes through the roof.
Absolutely. So really just, do your maths, make sure you can be comfortable with things on a longer term time horizon. And there's still good opportunity. If I was the first home buyer, if I didn't own a property, I would still be trying to enter the market regardless.
Good. I think that sums it up really well. It's all about pivoting, taking what the market gives you and making the best possible decision you can with the information you've got, with the knowledge you've got, and building the team around you. So if you want help with mortgage broking, head over to Cube Home Loans, have a chat with Nevada. If you want help buying in Queensland or Victoria, head over to Purpose Property. And I'd love to hear your thoughts in the comments below. Where do you think property prices are heading across Australia in the next 6 months? Let us know in the comments. We'll see you in the next one.
Thanks, guys.
Peace.